Today, I'm gonna lay it all bare and explain my biggest and most crushing losses throughout the last bull run and explain how each one of them has taught me an extremely valuable lesson that I'm going to teach to you all, so hopefully my pain can become your gain. Between opportunities I left on the table because of my own biases, lessons that the market still had to teach me that I didn't learn soon enough, opportunities I missed out on by not taking profits and positioning for future waves of the cycle, and more. I missed out on upwards of $50 million in crypto gains. No, I never had in my portfolio at any given time anywhere close to $50 million, but I definitely could have. And by taking a microscope to the prior cycle and understanding each and every one of the lessons that that cycle has to teach us, I plan to make it all back and then some. So this is part one of a two-part series that is designed to evaluate everything that happened in the last cycle, learn the lessons, and develop a strategy for the next cycle so that I can not only make back that $50 million, but a whole lot more. That's right, crypto is the land of opportunity and the land of second chances, but it's only so generous if you learn the lessons that this wild industry has to teach you. So let's break out a sad violin and play a very sad song, because I'm about to tell you about my most crushing losses of 2020 and 2021. So go ahead, destroy that like button and make sure you subscribe, because this is one of my most valuable videos ever. That's right, focusing on the losses, on all of the negatives, is one of the most important things you can do, and that's what we're about to do. So hopefully my pain becomes your gain on this wild and very long episode. As always, I'm EllioTrades. You can find me on Twitter at EllioTrades, and without any further ado, let's jump in. First and foremost, let's be clear. A new cycle is forming. No matter what you think of Plan B, all of the metrics around crypto have started to reset meaningfully. And over the next few months, it seems as though crypto will look to make a bottoming here in the bear market. Now, calling this bottom is the path to misery. I have not done it yet in this bear market, and it's going to take a while for me to truly get convinced that the bottom is in. Seeing a mega pump, as we've discussed on recent videos, is not an indicator that the bottom is in. Most of the biggest pumps in intraday trading happen during the bear market. So just understand, bear market rallies are vicious, and they often get people off the sidelines and lead to even more misery. It happened throughout the entirety of 2018, and it's happening, I believe, again right now. But the question is really not what's happening right now or what happened over the last few months. The question is, what can we learn from the entirety of the bull cycle that kicked off in early 2020 and lasted through late 2021 until the Fed changed their tune and started changing the way money fundamentally works? I've broken down every single big win and loss in my portfolio, and I'm going to show you all of my most painful lessons. And after you understand just how painful some of these lessons are, you can understand better my approach to the market. So I sincerely hope my pain is your gain in this particular episode. Let's kick things off with DeFi Summer. You see, at the beginning of 2020, right after the COVID crash, we got a huge change of policy out of the Fed. Now, the macro conditions changed and risk assets began to fly. But throughout the same period, an innovation in crypto was coming along called DeFi. DeFi had been invented really back in 2018, but didn't start to really catch and grow until late 2019, early 2020. And this was almost all exclusively happening on Ethereum, with one of the leading projects being ETH with the ticker LEND, a project you probably know now as Aave. What you see here is that Aave went from a fraction of a penny in late 2019. It pumped up here to, about 3 cents. And by the time we were, in June of 2020, we saw Aave here hitting a dime, up to 15 cents. Now, it was on this pump here in late June that I realized that the entire market structure in crypto had changed. You see, I had seen plenty of 2x's and 3x's throughout my time in crypto during the bear market, sometimes even 7x. But seeing something go from a fraction of a penny up to 15 cents, that was over a 30x. And in my opinion, marked the biggest single altcoin gain that I had seen in forever. And I was seeing gains like this across the DeFi sector. And this led me to believe that there was a strong new narrative in town that was capable of creating dynamic growth in the altcoin space. And I hadn't seen this in so long that it really made me understand that a new wave was upon us. And you can see it in the content that I comprehended the DeFi wave maybe a little bit later than others, but still in time to make insane amounts of gains from it. The difference is that I thought we were at the beginning of a multi-year bull run, just like had been kicked off in 2016 and 17, where we would see consistent growth throughout a long-term cycle. During this moment, we saw the explosion of coins like Polkadot and Kusama, and we saw their ecosystem coins like Acropolis and others come and rise like a phoenix from the ashes into a mega position of power. Now, even though I had missed some gains from some of the big DeFi tokens, I was still very, very excited to ride some of the small alts. I ended up riding coins like Acropolis, the Polkadot ecosystem, and yes, also coins like Aave, which I got into, right after I had noticed this big pump up to 15 cents, I unloaded into Aave. And I ended up riding up here into the 80-cent range. That was about a 5x there on Aave. Coins like Acropolis, I noticed very early on in their cycle, and I ended up riding them from way less than a penny up to almost 5 cents, 4.5 cents here. The total gains out of Acropolis were over 30x on my portfolio. The Aave gains were 5x, and there were many other coins like this, which I won't go through ad nauseum, but the point is I was up huge, and I had turned what was a beaten and bruised portfolio from 2017 worth only, less than 6 figures at the time, but almost 6 figures, into a comfortable 7-figure portfolio. But the difference is I gave it all back because I didn't realize how short-lived these different waves would be. Now, one of the things that happened during this period was coins like Yam and Sushi. Now, the reality is there was all these food coins that popped up, and that marked really the frothy end of DeFi Summer. One of the other things I want to point out was during DeFi Summer, Bitcoin didn't grow very much at all. As you can see, during the time that coins were going 40x like Acropolis or 30x, 50x like Aave, Bitcoin only went a few x's up here. It peaked at about, $12,000, a little over $12,000 here. And then, it started here at about $9,000, $10,000. It was not significant growth. It didn't even 2x. Obviously, from the bottom of the COVID crash, it about 2x'd. But the reality is that it didn't have that much growth as new liquidity into the market. For the most part, DeFi was cycling liquidity from existing participants with an exciting new narrative. This is an important learning because at that point, my 7-figure portfolio after DeFi Mania got cut down dramatically. And that's because I didn't take profits. I didn't realize that these waves were shorter, even though I had been right directionally at calling a significant amount of alts that did end up growing and becoming significant winners. I also invested and positioned into them, but the reality is that I didn't capitalize and take money off the table. I ended up giving up multi-7 figures during the crash after DeFi Mania. As you can see here, some coins like Acropolis went almost all the way back down from whence they had came, and it was only until Bitcoin exploded and alt started to all rise in tandem that I was able to actually get out with anything close to what I wanted to get out with. But the reality is that if I had taken profits here in any kind of meaningful way, I could have bought this blood because I remained very bullish during the October-November cycle as part of the larger cycle. So in DeFi Summer, even though I did great work and still grew my portfolio, I left multi-7-figure on the table, and that was really painful. But what it did help was it helped me learn a little bit better as to what altcoin market could do, most importantly, that altcoins were still viable, and more importantly, that bullishness was once again possible in crypto, and it was time to start paying attention even if momentary liquidity had dropped. After the crash, I became convinced that not only were NFTs bubbling in their popularity, but that NFTs in gaming were going to be one of the biggest trends of 2021. This conviction and reading the room, going against the herd when other people were scared, was what led me to position some of the best possible ways for 2021. The reality, though, was that I gave so much of my portfolio back that if I had taken profits there, in any way at the top of that DeFi run, I would have been so much better positioned into things like Axie Infinity, which went like 1,000x from this time that you see me covering it in December of 2021, and NFTs like CryptoPunks, which I didn't start investing into until later in 2021, really after the Bored Ape Yacht Club exploded, and I started really believing in non-utility, non-tech-based NFTs, but just communities. More on that later. But the reality is that not taking back profits on that DeFi run and having 7 figures to invest into this new trend was really the biggest thing that set me back because, as you can see, I desperately was trying to allocate to NFTs and Axie Infinity in particular, and so of course I would have been extremely well positioned had I been able to sink the 6-figure chunk into Axie Infinity that I wanted to. Now let's talk about H1 2021, because while the first half of 2021 saw almost everything go parabolic, Again, I made the mistake of thinking that we were in a 12-month long bull cycle just like 2017. I didn't fully believe that the DeFi wave was enough evidence that we had deviated from this 4-year pattern. And so my biggest mistake, without a doubt, of the first half of 2021 was not selling my IDO allocations. That's right. I did cover a number of IDOs that went 100x, 200x, 1000x, ridiculous numbers. And what I believed genuinely was that these coins were launched with such strong communities that they would continue to grow and appreciate throughout the cycle, which I believed would last for the majority of 2021. What I didn't realize, which we now realize, is that all tokens, no matter how amazing they might be, how perfect their mission might be, are, if they're launched with extremely low floats and extremely high valuations, destined for lower prices eventually. And this is a good example. Bridge Mutual is a coin that I really thought had the legs. It was in a narrative that I loved. The team I knew well. I thought it was all aligned. And of course, as a result, I didn't sell it. In fact, I didn't take any profits on BMI, as was the case with almost every single one of my IDOs. In fact, IDOs were my biggest mistakes ever. The reality is that if I had sold my IDO allocations, it was easily 8 figures of profits that I left on the table. Now, part of this is because I almost never sell stuff that I cover here on the channel anytime close to covering it. That's part of my sort of unspoken commitment to my audience, is that I don't want to be the reason why any chart goes down on something I cover. When I cover stuff, I genuinely am rooting as hard as I can from the sidelines for that thing to go up. Despite the opinion that many people have of crypto YouTubers, I genuinely value my own success by that of my audience. And so, of course, the IDOs that I covered, that I got early access to investing into, I held on to them and I waited for the cycles to play out, believing that they would have more legs in them to grow. Unfortunately, coins like Bridge Mutual, even though I really believed in the promise of decentralized insurance as a huge narrative that would grow with DeFi, the reality is that H1 2021 took all of these IDOs straight to Goblin Town and taught me an extremely valuable lesson in the process, which is that when things are way up, you simply need to take profits regardless, because in the end, if you don't, that money will dissolve into dust faster than you can ever imagine. The second learning, of course, from IDOs is that these early token launches are all, for the most part, traps. Even with coins that have the strongest, craziest communities ever, like ApeCoin, the early launch days still saw way too hard of a pump and a huge mega dumpola. And what's the difference if you're down 80% or 90%? At a certain level, all your gains have been given back, or the vast majority of them. I could go on and on, but there's no point in beating up on specific projects. Most IDOs ended up with unsustainable prices, and learning that those early launch tokens were unsustainable is really key. Of course, that begs the question of which token models for launch are sustainable. We'll talk about that later, and even more so in a follow-up episode to this. But just know patience is something that I learned in the second half of 2021, and understanding not to buy into things that were obviously at ridiculously inflated prices in the second half of 2022 saved my butt. And I'll explain exactly how I learned from this in the first half of 2021 and applied these lessons in the second half of 2021. So now let's talk about a really interesting observation that I came around to at about midway through 2021. And this was, of course, that memes and mimetic value does exist, and it is real. This was something that I faded completely, especially after the food coins ruined DeFi Summer. I believed that all meme coins were effectively trash, they were toxic, they were headed to zero, and that they were not worth investing in. They were effectively just bad for crypto. And so I faded Dogecoin. Not only did I fade Dogecoin, but I faded Shiba Inu. And I actually have a chat with a buddy of mine in February where he asked me, should I buy Dogecoin? And I said, don't buy Dogecoin. If you want to buy Dogecoin, just invest in Shiba Inu. It's the cheaper, faster horse that will go way more parabolic if Doge goes parabolic. And of course, if you look back when I told him that, well, the actual price chart for Shiba Inu, it's so low back here in February, it's almost non-existent. It went up easily over 1,000x. If you fast forward to March of 2021, it's just unbelievable, the amount of growth that happened here. And I told many people that were interested in Dogecoin, just buy SHIB. Now, the reality is that for these sort of degenerate plays, I would typically allocate, about 10K as an investment into these around that time. And so if I had invested 10K into this, I don't even know the math, but it would have easily been over $10 million. I believe even more. I haven't done the math because it's just too painful to do. But just know that this was an 8-figure loss by me, not just understanding that mimetic value exists, not understanding that the trend of Doge was really strong and would inspire others to follow it. And I was telling others actively to buy SHIB and not doing it myself. And so that was another thing, is allocating to things that are obviously in trend, and more importantly, understanding what memes and mimetic value is in crypto. Now, speaking of fading memes, I also faded sushi because I was convinced that all food coins and all meme coins were trash. The reality is that these are not all created equal, and that you need to be able to separate different types of tokens from others. In this case, I was actually making content nonstop about sushi at the time it was called Sushi Swap, once Sam Bankman-Fried and SBF stepped in and started to kind of right that ship. I started making content when it was way under $1 here. In fact, there are several YouTube videos where I talk about sushi. And of course, it ended up running up here to almost $25, I believe, on a wick, well over $20. So that's about a 40x gain there. And the thing is, I didn't have conviction in the memes because I was just fading all meme coins, fading all things that were food coins, which were, of course, the meme coins of 2020. And that was just my mental framework, was to fade the memes. And this, of course, came back to bite me. In my opinion, this led to about a $500,000 loss because I faded the meme. That, of course, assumes that I would have sold near the top. Again, something that I wasn't particularly good at in the first half of 2021 because I thought the cycle was going to last all year. Now, this one's a little bit controversial because people love to take their crypto super seriously. But the reality is that NFTs and meme coins and many other examples within cryptocurrency show us that strong communities can create value wherever they want. Take, for example, the rise of Bored Ape Yacht Club, which began as just really a JPEG, but people just felt passionately about their ideas as to what to do with NFTs. The community was so strong that they've been able to muscle up, become a multi-billion-dollar company, acquire amazing tech, and work with companies like Improbable, and start to put out some of the most compelling metaverse technology we've seen to date. And this all started with the real power of a meme. I actually got told by my business partner in early May 2021 to check out this new thing called Bored Ape Yacht Club. I hopped into the Discord, I hopped into their Twitter spaces and their clubhouses, and I heard a bunch of grown men making ape noises, and I heard a passion for this community like I had never seen for almost anything in crypto. And like a light bulb switch, it occurred to me that communities can create value anywhere, that memes and common ideas have value. And I kind of took on my bias that had prevented me from making tens of millions in SHIB and Doge when I knew these things were going to run, and I decided to give a chance on a new meme, the Bored Ape Yacht Club. That ended up being one of the most important changes of mentality that I had. You see, it's important that you look back at each moment in crypto and analyze your behavior so that you don't leave more opportunities on the table or give back more gains. Now, the market completely fell apart in April, May of 2021. There was a mega downtrend. But in this downtrend, what rose from the ashes was one Axie Infinity, which kept pumping against the market. And as we came into early July, Axie was on an absolute tear. Now, while I didn't get all of this Axie run, I still had some allocation from earlier in the year. I really doubled down once I saw it pump like crazy, going from about $4 up to $20, up to the mid $20, which was a huge 500% gain while the entire market was stagnant and dead. Now, recognizing this early pump into Axie Infinity helped me position completely around the metaverse coming into the second half of 2020. Narratives and understanding that those narratives were sound was really important. Now, I want to be clear here because during this collapse that happened, as you can see, I published this video in June 22nd of 2021. This was when it became clear that the initial half one cycle of 2021 was officially coming to a close, or it was really over. And I started to think back. I said, well, DeFi wave lasted about 2-3 months. Then we had this first half wave with Bitcoin and altcoins that lasted, maybe 3 months or so. And what it felt like to me was that we were no longer in a 4-year cycle, but in a bunch of bullish waves. So I posited a new theory that we had been wrong about the 4-year cycle and that this was now a series of microcycles. Now, this concept of microcycles was one that actually helped me get way ahead. You see, I analyzed the 2 different moments of collapse that we had been through, and I started to look back at the meme coins of 2021, the food coins of 2020, DeFi, NFT ecosystem wave, as well as the mania around IDOs, Bitcoin, and Ethereum. It was all spelling out smaller bullish waves that lasted a few months instead of a big, long 12+ month bull cycle. And that was a new type of mentality that really helped me conceptualize what was ahead in the second half of 2021. Now, the other thing that we need to talk about is taking profits, because in the first half of 2021, I took most of my profits into ETH, and then ETH crashed and burned with the rest of the market. So if I had taken more profits into stablecoins, that would have been a much better way to do it. And it's certainly what helped me at least protect myself from ultimate ruin in the second half of 2021. Now, I want to be clear, even though I got the Bored Ape Yacht Club thing right, and I knew that only the blue chips would truly survive, I also started allocating to things that I thought were blue chip. And this led me to generative art, which, as you guys know, I made quite a bit of content about in the summer of 2021. Now, Fidenza, I bought this Fidenza for 100 ETH, which at that time was about $350,000. The reality is that I'm way down on this, I'm sure. However, the Fidenza market is strong enough with strong enough collectors that I believe it'll come back one day. Now, on the other hand, I did buy a lot of other pieces of generative art. I'll just give you guys a quick tour here of the ones that are still in my wallet. And the reality is I probably lost over $500,000 by cruising around and, aping into things that I thought were beautiful. But the reality is that I just really didn't know what I was doing. I was trying to find the next blue chips and, subscapes and ringers I definitely got crushed on. This was a good example of taking one lesson that had worked and something that was working, which was, the Bored Ape Yacht Club play, and applying it incorrectly to others. The reality is that blue chips are hard to create, hard to find, and that when you find one, it doesn't mean that you can easily find the next one. The actual resilience of Bored Ape Yacht Club has been an absolute marvel. It's been one of the most interesting things in the entirety of crypto, and to think that you could easily replicate that was a mistake. This mistake led me to lose at least $500,000 on NFTs in the second half of the summer of 2021. Now let's talk about the second half of 2021, because this is where I learned my lesson. I felt like we were still another wave away from at least completing the cycle, and hopefully we had more waves after that. I had also seen the resilience of NFTs and Metaverse stuff within the bear market, specifically around Axie Infinity and Bored Ape Yacht Club, and NFTs were super hot during the summer of 2021. I also was aware of this concept of mini cycles. So while I did get crushed on some super high value NFT buys, I did have plenty that did pay out, and I was able to at least be okay. I wasn't completely crushed from the NFT run, especially when you consider that the value still in my exposure to Bored Ape Yacht Club was so much bigger than what I had invested. It was all evening out, and I still had this optimism towards the NFT space, which continues to this day. The reality, though, is that my biggest wins came around positioning towards the rise of Metaverse and gaming that I knew was going to get set off by Axie Infinity. And I talked about this ad nauseum throughout the summer of 2021, that the big wave for gaming was coming, and as we got the Q4 blow off top, gaming was going to be the place to be. And well, this was probably my most accurate and most successful prediction I've ever had on the channel, and this was also where I saw the vast majority of my altcoins go crazy. But nothing is perfect, even though I was screaming about Sandbox here at about 50 cents or so, and Sandbox eventually went to, $7 or so. So easily a 14x there on a major cap, on a big cap coin, and several other Metaverse coins that went absolutely parabolic, 20, 30, 40, 50x. The biggest issue for me was that I didn't respect the Fed pivot. In early November, Bitcoin started dropping, and this was because the Federal Reserve announced they were completely changing their policy towards money. Now, to me, boomers and doomers screaming about the Fed and macro, that to me was old news, and all those people had missed out on so many gains that I didn't really respect their opinions. So why was I going to get out of the best run that I had had? Even though I had said that November and December were the time to sell because we don't know what the bear market will hold, I was always planning throughout the summer. I was saying, look, we got to sell in Q4 because I was using the expression, take home some bacon for winter. I don't know why I'd want to eat bacon all winter. It doesn't sound very healthy, but the reality is I think that sounded good in my head. I also had a mustache. There was a lot going on at the time. The point is that even though I knew November and December were optimal sell periods, I didn't respect and I didn't care care enough about the macro pivot from the Fed because it almost perfectly aligns with the complete reduction of liquidity in crypto. And from the point that the Fed pulled the rug on risk assets and declared that they were going to start quantitative tightening, risk assets got completely crushed. And once again, we had liquidity permanently leaving the crypto ecosystem. Now back to Metaverse Mania, because obviously that was early November, but we still saw Sandbox go like 3-4x from that point. And that was one of the biggest Metaverse, and still is one of the biggest Metaverse coins. So I was thinking maybe Metaverse can be resilient to this trend. But then what we saw was Sandbox go from about $7 all the way down here to about $4 within the space of a few days. And it really felt like a blow off top. And that's when I started to take exposure off. I started to say, hey, if you're overexposed, maybe it's time to take exposure off. And I was lucky, even though most of my Metaverse coins absolutely eviscerated very quickly, I had taken just enough profits throughout the second half of 2021 to feel okay, to feel like I was alive, to feel like I wasn't completely having the life sucked out of me. Now, even though the altcoin mania was done and I believe that the pivot was in and that it was time to be very cautious on altcoins, the reality is that I still believe that NFTs could do what they did in the summer of 2021 and have an off-season boom. And that's precisely what happened. And in January 2021, we had the biggest month of NFT volume ever. Now, even during this time, even though I had predicted this would happen throughout the end of Q4, saying after the altcoins run, money's going to flow into NFTs, the reality is that I still thought this would last longer. However, I had been hurt before. I had been hurt in DeFi Summer. I've been hurt in H1 2021, and I got hurt again at the end of H2 2021 because I didn't believe that the Fed and macro was all that important, and I got taught a very valuable lesson. And so even though NFTs were booming and all of my ape exposure was reaching astronomical highs and almost all the NFTs in the market were going bananas, what I realized was that we just didn't know how long the wave would last. What I did believe, though, was that blue chips were totally possible and would likely remain resilient, which has happened. But my coverage of NFTs at the beginning was very, very caged. And I've said this from the beginning. The good NFTs, the blue chips, will last and last and last. The Bored Apes, the Fidenzas, the types of assets that people want to continually collect regardless of the price because it means something, because it's durable. And what I believe is the most important game ecosystems and their assets will in the future supplant those, even though Bored Apes are becoming game assets. The reality is that I was very, very cautious in my optimism, which kept me from overexposing too much in this run. I was able to learn from my mistakes and manage my risk. And this is one of the biggest things that you can learn in crypto is no matter how much you believe in something, to manage your exposure and manage your risk, to not stick all your money in something, even though it seems like the most sound and safe thing in the world. For example, UST and Luna. And of course, you guys know that I pretty much flipped bearish and I have been preaching for you to take exposure off for quite some time now. But the reality is that NFTs continue in ETH terms to be very, very interesting and to way outperform their fungible altcoin counterparts. So let's get to the wrap up where we have all of the lessons learned from this crazy 2021 bull run. All things considered, I lost a big 8-figure amount of money by having too many biases, by not taking profits, by not recognizing when trends were overheated, by not respecting the Fed, and so many other ways. I lost so much more money than I ever thought I would ever have in my life. And that is something that stings and is painful to this day. Now, I'm not embarrassed about the way I lost money because I genuinely believe that I've learned and grown from each one of these painful, stinging losses. And if you learn, and if you become better, and if you're able to prevent errors in the future, then you didn't lose it all. You paid for tuition. And that's what I believe I did in 2021. And you better believe that I'm not going to be making the exact same mistakes next time. Nope, there'll be new and different mistakes, but I'll continue to evolve, and my percent hit rate and my ability to manage my portfolio will only go up. First and foremost, taking profits is key. No matter what you do, selling into stable coins like USDC, not algo stables that print unreasonable amounts of yield, that is how you secure profits. Selling into ETH is great during a bull run, and you can do it with part of your profits. But remember to sell some of your profits into stable coins, into fiat, and just diversify those profits so that when the music stops in crypto, you'll be left with something to buy the blood next time or to live your life. No matter how many times I say this, people still don't seem to do it nearly enough. Always be selling, always take profits. That is the number one learning from the entire bull run of 2020, 2021, and 2022. There is absolutely no substitute for taking profits. Pure and simple. Second, even if there's a bull run, there is no pure bull run, that we don't get some unending 12-month wave of bullishness. Every single asset can and will overheat at some point, and so if the music's been going for a while, you should be supremely suspicious. The best way to position is to get in and predict some of these trends, to position when things are very boring and there is blood on the streets, and to wait for those narratives to play out again. The reality is that if you're hopping on while the trend is in full swing, it's the most dangerous point, and that these trends are oftentimes much shorter lived now in crypto than they were in the past. Next, Bitcoin is still king. There's no decoupling yet, although I do believe that a strong game ecosystem that is able to onboard Web 2 players and make them Web 3 users is a killer app of the blockchain and will eventually lead to a strong decoupling in price from Bitcoin. But until we see the actual user data, to me, Bitcoin is still king, and we need to respect when Bitcoin is being tossed around by the Fed and the macro. The next learning is that Ponzi's don't work in the bear. They never worked in the bear, and they will continue to not work in the bear. However, they can work very well in a bull. If it seems very clear that the ecosystem you're a part of is effectively a Ponzi, then make sure that you understand it's going to crumble during the bear. No, I don't think NFTs are Ponzi's, but Luna UST, a stablecoin that pays you magical more stablecoins, yeah, you gotta ask yourself at a certain point, where does the money come from? And why is it so valuable to pay you 20% just to park your money there? If you don't understand it, then you shouldn't be in it. Just to reiterate the whole take profit thing, always be selling, ABS. You want abs, you wanna always be selling. And you can't go broke taking profits. Just remember that. More on the mini cycles is recognizing trends and riding them hard is a great way to make money during a bull run. But if you don't take profits, you'll lose money as fast as you earned it. Next, we got a lot of people talking about how the cycle can't end because Bitcoin didn't have a blow off top. Well, yeah, Bitcoin didn't have a blow off top. Neither did Ethereum really. But we saw many blow-off tops in categories across the board, whether that be meme coins, DeFi, Metaverse coins. We saw a major blow-off top in Sandbox, in all the DeFi coins, in meme coins like Doge and SHIB. And those were signals that the major wave of new liquidity and bullishness had paused in a specific category. So while blow-off tops were no longer present in Bitcoin, they were certainly present in specific narratives. Next, memes are real. They have value, and we're still trying to figure out exactly what that value is. But fading memes and their value altogether is foolish. Also, putting all your money in a meme is very foolish. Learning to have risk management, to put percents of your portfolio into certain narratives and diversify, that is the key to being happy. And if you don't want to manage your risk, then you should just stick your money in Bitcoin and Ethereum and forget about it for 10, 20 years. But if you really want to trade this market and extract max value, you need to manage your position size and learn when to sell and take profits. Next is, if swing trading in a bull market, meaning buying things and selling them when they go up in a bull market, was too hard for you, then buying and selling when they go up in a bear market will be impossible. I don't care how much FOMO and how much cope is on the timeline right now on crypto Twitter. The reality is that if you think that you're just going to buy the capitulation and sell the rally, well, that's a very simple way to think about it. And in my opinion, you'll probably get chopped up and crushed in this very, very savage and very unpredictable part of the bear market. In my opinion, waiting for the macro cycle pivot and surviving and trying to accumulate as much dry powder through your work product as possible over the next few months is the way that normal people can get ahead of this. And that's why patience has been the ultimate virtue over the past few weeks and months. Next, and I must reiterate this, fixed yield in crypto is a myth. It doesn't exist. Anything that promises you fixed rate yield is something that you should run away from very, very fast. On that note, where there's smoke, there's usually fire. Take, for example, Luna, Celsius, and Three Arrows Capital. You should be wary of liquidity flows. When new liquidity is flowing into crypto, it's a great time for everyone. But when liquidity is just recycling, it can be very dangerous. Examples of when liquidity was cycling was DeFi Mania. Bitcoin didn't grow very much. It was mainly just people trading against each other, recycling liquidity. When Michael Saylor and all the Bitcoin bulls hopped on the bandwagon in early 2021, a ton of new liquidity entered the market and valuations soared. It was an easy time to make money. But in the second half of 2021, as well as during the NFT whitelist mania, mostly that was liquidity recycling, not new liquidity coming into the market. Ironically, meme coins did bring in a ton of new liquidity from Gen Z and other types of less serious Wall Street bets types investors that weren't so caught up and hung up on, quote, fundamentals. Liquidity flows are king, and as the Fed pulled the rug on liquidity across the entire global economy in early November, that was the bat signal that crypto was going to get crushed. There were still NFTs that brought in new liquidity. Looking at Moonbirds, clearly there was a lot of sidelined Web 2 money that jumped in to support Moonbirds. That was no normal recycled pump here. That was a lot of new money jumping in, and an insane amount at that. Understanding which events created new liquidity and which events recycled liquidity is absolutely critical. Now, just like fixed rate yield was a myth, variable rate yield is not a myth. In fact, variable rate yield is very much a reality, and the sort of boring DeFi 1.0 protocols like Aave and Compound are still going strong and some of the most important innovations in the crypto space. Don't miss the forest through the trees. DeFi is still alive and well. CeFi and DeFi 2.0 that involved aggressive and dependable yields for normies, well, that stuff is a fugazi. Finally, you just always want to be cautious when things get too optimistic and too bullish. It happened in the first half of 2021, and it happened again in the second half of 2021. In retrospect, it's easy to spot these, but when you're in the middle of the storm, it's often hard. That's why having a simple and dependable take profit strategy is the easiest way to avoid getting absolutely crushed, because when all is said and done, when the music stops, you'll have always siphoned something off to the side. So what's ahead of us, and how can I use this information to get ahead of the next trends? Well, just like before, I'm waiting until I genuinely believe that the Fed is going to pivot. I respect the macro now, and that's why I'm waiting for clear signs that the money flows are going to change direction. And when those do, I'll start allocating aggressively because I'm sure that the downside is fairly limited. And what am I going to allocate to? Of course, the majors, the kings, Bitcoin and Ethereum. I'm going to stick a ton of money in there because when the money flows come back, you better believe that Metaverse, DeFi, or any other use case for blockchain will definitely lead to more adoption of those assets. So respecting the Fed is something I'm definitely going to do on a macro level, understanding macro conditions and how they lead to the acceleration of risk assets like crypto. I'm also going to be looking for fundamentals because, of course, the hype waves around Metaverse and gaming were driven by Facebook changing their name, by one project, Axie Infinity, gaining a user base, not really by an entire widespread adoption of gaming yet. But I believe strongly to the core of my body that there will be games that achieve massive user bases over the coming bear market. And those games will probably have their fundamental value outstrip their token values for quite some time. Those are the types of lessons I'm going to look for because converting Web 2 users to Web 3 users via gaming is to me the ultimate funnel. And the projects that are able to do that are the most important ones in the entire space. I'm also keeping a close eye on NFTs and trying to see which ones are durable through this bear market. The NFT projects that sustain values and effectively just don't even lose value, maybe they don't gain value, but at least they're durable. Those are the ones that I'm very, very confident will be around for a very long time to come and will most likely lead to wild upside at some point in the future, thinking significantly down the line. Again, it's very hard to predict exactly when these happen. It's also important to realize that by positioning well throughout this bear market, understanding when the Fed does pivot, and being already positioned in the assets that you want to be positioned in before the next run, before things get crazy, is the number one skill and the number one thing you want to try to do. Because once things heat up, emotions run wild, and it becomes very hard to see the actual signal through the noise. So take this time when the world is quiet, when the market is not explosive with gains, when the emotion is lower. Do the research. Build your conviction in the right projects and layer in your buys over a long period of time so you can diversify your entry price. That, of course, is my opinion, not financial advice. I've been wrong many times before. I've lost a lot of money in this market, but thankfully, by learning from those mistakes, I was able to salvage a very decent portfolio and have enough dry powder in stablecoins that I can build up a very exciting portfolio during this bear market. And I sincerely hope that my pain has become your gain on this episode. I sincerely hope that each and every chapter of my pain throughout the 2020 and 2021 bull cycle can lead to a learning that can help you better advance through this world of crypto. By understanding what happened in the past, you can be a far better participant in the future. On the next episode, I'm going to tell you all about my plan to make back the money I lost. Because if you think I've given up on all that money that I left on the table, you are dead wrong. I'm going to be making it back and then some. And I'm beyond excited to do it, sharing my perspective at each and every step of the way. As always, if you enjoyed this video, smash that like button as it took quite a while to compile all this information. I sincerely hope it helped all you out there. Smash that like button and subscribe because I do believe that I can repeat my success to a significantly bigger degree on the next run. I can be better informed and I can manage risk far more appropriately, and I'm excited to do it together with you all. As always, my name's EllioTrades. You can find me on Twitter at EllioTrades. You definitely want to sign up for FTX as it is the best exchange in the business, and after using them all, it's my exchange of choice. You can sign up for FTX with the link below. This episode isn't sponsored by FTX, although they did sponsor a series on my channel. This is not a sponsored episode by FTX. I genuinely think they're the best product in the market. Again, you shouldn't leave any excess amounts of money on any exchange, but if you need to get in and out of crypto or have some of the best trading tools out there, check out FTX. It's the absolute best product out there. As always, you can find me on Twitter at EllioTrades. I thank you so much for watching, and I'll see you very soon on the next episode.